Right, there's a story you've probably heard about Lester Piggott, 12-time Derby winner, national treasure, sent to prison in 1987 for £3.25 million of hidden tax. The story goes that his own accountant grassed him up, handed the file to the revenue, cashed a cheque. It's a great story. It's been retold in every pub in Britain for nearly 40 years. It never happened. Piggott himself denied it. The tax press has always treated it as folklore. There was no accountant. There was no cheque. From April this year, that story is real. From April 2026, the taxman will pay a private citizen up to 30% of whatever tax they recover from you. If a tip that citizen gave them leads to a collection of £1.5 million or more, there's no upper cap on the reward. But you're not Lester Piggott. You're a UK limited company director who's built something worth taking. And every ex-spouse you've fought, every bookkeeper you've fired, every business partner you've ever crossed just became worth a percentage of your tax bill. Stay with me, because the biggest lever any UK director can pull on this isn't secrecy. Secrecy is the thing that just got a bounty on it. The lever is structure that survives daylight. And I'm going to show you what that actually means before the end of this video. Subscribe, because this channel covers the tax news that changes what you can and can't do before the FT prints it. Here's the mechanism, cleanly, because half the headlines have already got it wrong. The reward isn't automatic, it's discretionary. The revenue decides. The reward is between 15 and 30% of the additional tax they actually collect from you. Not penalties, not interest, the tax itself. The tip has to lead to a collection of at least £1.5 million. Below that, you're not even eligible. Do the arithmetic in your head. On a £1.5 million collection, the informant walks away with somewhere between £225,000 and £450,000. On a £10 million collection, 1.5 to 3 million. There's no upper cap on that reward, none. And the informant has to give the taxman their contact details to be eligible. No anonymous payouts, which means the person handing you in is now a witness on the record, willing to appear. The Chancellor announced this in the November 2025 budget. It went live from April 2026. On the Treasury's own scoring, first checks land in 2027 and 2028. By 2030, they expect it to have collected £225 million of extra tax. I want you to sit with this for a second. Because when you hear tax informant, you probably picture some professional whistleblower, some crusader. You shouldn't. The Revenue's fraud hotline took 164,000 tip-offs last year. Nearly 500,000 people a day picking up a phone to tell the taxman about someone they know. Ask any tax advisor who they see doing this in real life. It's the same short list every time. Everyone on that list knows enough to be dangerous. Everyone on that list has motive, and from April, every one of them has a price. That's what's changed. The tip-off has always been there. The bounty hasn't. Yes or no? Comment below. Now here's what the newspapers won't tell you clearly, because it's the whole point. The Revenue didn't build this to catch you claiming the wrong Home Office pence. They built it, in their own words, for serious non-compliance involving large companies, wealthy individuals, offshore structures and avoidance schemes. That's a direct quote from the taxman's own July press release. Read that carefully. It's aimed at hidden money, undisclosed offshore accounts, structures nobody outside your kitchen knows exist. It isn't aimed at planning that's already on the Revenue's desk. Because here's the awkward truth for anyone selling you clever tax schemes. UK avoidance planning is already required to be disclosed to the taxman. That's a set of rules called DOTAS. If a scheme meets the definition, the promoter has to tell the Revenue about it inside 5 days. They get a reference number. You have to write that reference number on your tax return. If your planning is already declared, there's nothing for anyone to inform on. The taxman already knows. And structural planning that lives in daylight, a genuine family investment company with its accounts filed at Companies House, a business property relief claim on an actual IHT return, non-residents backed by day counts under the statutory residence test, all of it's already visible, already documented, already defensible. There's no bounty on filed accounts. The bounty is on the second set of books, the nominee, the offshore account nobody declared, the cash in the attic. Ken Dodd famously had £336,000 of. This is the exact work we do at Tax4 Pros and CT Private Office. If it's for you, apply through the link in the description. Before I get to the defence, if you want the same map I use with clients, the planning routes that stand up to daylight, that's in the Tax Game Plan, £9. Link below. So what do you actually do about it? You do the thing that's genuinely hard to fake and easy to defend. You put your tax position on the record. You file it. You disclose it. You document it. You make it survive the audit that hasn't happened yet. That's not a slogan. It's a checklist. If your tax bill is low because your planning is documented, filed, and defensible, the revenue already knows what you're doing and has already had the chance to challenge it. The window on that challenge closes with time. Once it's closed, it's closed. If your tax bill is low because nobody's told the taxman yet, that window never closes. It just waits for one grudge. That's the actual dividing line the bounty scheme draws, and the honest bit. Even documented planning can be challenged. The revenue can win. If they do, the extra tax they recover from a filed but unsuccessful arrangement still counts toward the 1.5 million. So aggressive avoidance that lives in the light isn't perfectly safe from this either, just safe from the criminal side. The genuinely safe territory is planning where the mechanism is on the face of the statute. Business property relief on real trading business assets. Section 162, incorporation for a real property business, a family investment company set up for real family reasons with real annual accounts, non-residents with real day counts, reliefs that Parliament wrote down and meant. That's what defends you, not silence. Here's where we've landed. The taxman has just put a price on a grudge, up to 30% of whatever they take from you. No cap. Live from April. The scheme is aimed at hidden money. If your planning is hidden, it's a target. If your planning is documented, filed, and defensible, it isn't. And if you're watching this thinking, I don't actually know which side of that line I'm on, that's the honest answer, and it's a fixable problem. If you want us to look at it, there's a link on screen and below. It's one link. Applications go through our own team and the right side of the business picks it up. Like and subscribe because I make one of these every week and the algorithm only shows this to people who told it to. Comment yes or no if you can name someone right now who'd sell you out for 30%, and thank you. Every like, comment, and subscribe helps us keep making these. It costs you nothing. See you in the next one.